Good morning.
Morning.
Everybody hear me okay?
Yep.
Yes, good morning.
Good morning, good morning. All right. Looks like we got a minute or two before we get started. It's chapter 17. All right, let's see here. So it looks like we're reviewing 16.6b on page 608. So I'm going to ask everybody to put themselves on mute. We are going to first, I'll share my screen in a second. Talk about what's upcoming, and then I'm just trying to get my answer key here. We will take a look at the problem, see how much time we have left, and if we have some extra time, maybe do one more statement of cash flow. So today the plan is then, what I said, we're going to review the homework and 16.6b, see what time we have left. And Friday's class, we're not going to physically meet. We are going to have that time to complete your tests, which is already available. See something here. Just grabbing my calendar of events here. So there we go. So chapter 15 and 16's test, I'd like you to have done by the 24th, which would be Friday at 11:59 p.m. Just like we normally would in class. I think there's a 2-hour, the details about the test are within the folder. Also, if you have any kind of additional work, detailed computations that you use to get to your answer in Connect, you can upload those. So if it marks entirely wrong, I could go in and give you partial credit. So there's a Dropbox in Learn. So I'll go into that really quickly. We have the time. Then we're into our last chapter. So over the next 6 classes, that's what we're going to be working on. And it really, to get a good, thorough understanding of chapter 17, we will use all that time because that's probably one of the most important chapters for a lot of you because you're not accounting majors. So you'll be using the tools we're learning in chapter 17 as a business major. Okay, also your SmartBook Tableau graded problems, they're going to be due tomorrow night for chapter 16. Tomorrow night. Then you'll have for day, get ready, take your test. Are there any questions on it? Okay, let me get into Learn, and then I could share my screen so you can see what I was talking as far as the Dropbox. Okay, screen. Okay, so I'm in Learn and find your class. That's right. This is the way my class looks, so yours is going to look a little different. Okay, so you're going to scroll on down. Right after chapter 16, you're going to see the box. So I'm sorry, the test consists of 20 multiple choice and 5 problem type questions. Let me double check on that 90 minutes, either 90 minutes or 120. You have 1 attempt, must complete in 1 sitting. You can submit any detailed computations for this test in the Dropbox. And so here's your access to the test. Here is your area that if you are interested in, showing me how you came up with certain computations, you go in here. You have to make sure they're in a computerized format. So either you take pictures of them, you scan them, or they're in some kind of file. You will browse to attach them. You can attach as many files as you want. I prefer 1, but I know if you take pictures, it may be more than 1, and then just submit them. Okay, so if you are interested in doing that, that's available. And try to do it as soon as you can after completing the test. So I'm not looking for you to correct your mistakes. I'm looking for you to show me how you came up with the problem that was more, then I can give you partial credit. Any questions? All right.
Yeah, Miss Laura, I have a question. So for the test, can you tell us like which problems are going to be for chapter 5?
15. Chapter
Yeah,
15.
15, sorry.
Okay, so you're definitely going to do, I'm going to make sure that test time is 120 minutes, 2 hours.
Yeah.
Okay, so I'm going to modify that. But chapter 15, remember we dealt with investments. So you want to make sure you know how to handle each type of investment. So if it's a bond investment, what do you do if it's in a trading category? What kind of journal entries? What kind of journal entries is if it's in the available for sale category? What kind of journal entries if it's held to maturity? So you want to make sure you understand and remember all of those different categories and the required type of journal entries. Then you want to make sure you remember if it's a stock investment, what kind of journal entries do we do if it's less than 20% ownership? What kind of journal entries if it's under the equity method between 20 and 50% ownership? And for the last category above 50%, you'll definitely have some multiple choice. Okay, so of course there's going to be multiple choice from chapter 15. But when it comes to that above 50%, that's all you need to take a look at the notes we took on that. Then from chapter 16, you'll have multiple choice, and then it'll be completing a statement of cash flow, very similar to the problem we're going to be working on today. Okay.
It's a lot.
Yeah, it is. So that's why 2 hours I think will be good. No, I'm not saying you'll have a question on every single one of those.
No, it's okay.
But you want to be familiar with them all so that you can answer the questions.
Yeah, thank you.
Right? And I think you guys are in pretty good shape. You've been coming to class, you've been doing your homework, you're doing your graded stuff. You're going to be fine.
Yeah, thank you.
You're welcome. Anybody else, any questions before we get started into reviewing problem 16.6b? All right, well, let me catch that file. There it is. Okay, and I can share it with you guys. And as we're going through, I guess I'm a control freak here. So I'm not asking you guys to participate, and I've got to stop doing that, but we're near the end of the semester. So don't hesitate. No question is stupid, just like when we're in class. Ask me any kind of questions you have, but I'm not posing out there and saying, well, what do you think about this? What do you think about that? And I shouldn't say this. I should shut my mouth now, but there's a lot of rumors about the fall at a lot of institutions going remote. So I'm going to have to change my style a little bit, but that's not something that is definite. It's just kind of in the air. They're talking about it. So stay tuned for that. But anyway, that's my problem, not yours. You want to look at 16.6b. So ask away if you have any kind of questions as we go through this. Also know that this problem is also out online already, I think, in Learn. So there'll be 2 lectures on it. There we go. Okay, so 16.6b, SAT2 company. All right. SAT2 company's current year income statement, because you need that. Their comparative balance sheet, that just means there's 2 years, last year and this year, and some additional information, which you need that as well, are as follows. They give us some assumptions or what happens with the company. All their sales are on account, are on credit. So they don't have any cash sales. All credits to accounts receivable are from customers paying. All, purchases of inventory are on credit, so they never pay cash for them. And all debits to accounts payable are for actual cash payments of inventory. Other expenses are cash expenses. And any change in income taxes payable are because we had additional expenses and cash payments. Okay, cool. And that's how you will, that information is pretty consistent with what you'll see in a test. Now, it says take that information now and complete your statement of cash flow. Don't forget, because we get so focused on the detail, the mechanics of it, don't forget to start with your heading. I'm not sure if in the test they automatically give it, but if they don't, make sure you do. So we have SAT2 company statement of cash flows for the year ended, current year ended December 31st. So that's letting people know this is just for 1 year, it's for this year. We'll then start with our cash flows from operating activities. Remember, with these types of cash flows, we're converting net income under the indirect method, net income accrual basis to net income cash basis. We don't call it net income cash basis, we call it cash flow from operating activities, but that's essentially what we're doing here. So that's our starting point, net income, 202,767, right off of our income statement for this year. The next step is look for any items on our income statement that have no cash component at all, or are gains and losses, because they shouldn't be included in cash flow from operating activities or to determine it. So then we define adjustments. So now we're going to start adjusting net income to reconcile net income accrual basis to net income cash basis. The first thing we do is add back depreciation expense. It was subtracted to get to net income up here. If we're converting this to cash flow, we shouldn't have subtracted it. Add it back. So we look on our income statement. Are there any other gains or losses? No. So we're done with that part of our adjustments. So now we go and focus on current assets and current liabilities that are considered operating. What's good is SAT2 company has so you know, the total current assets, if you didn't catch this, is in the wrong position. It should have been underneath inventory. So the only 2 assets, current assets they have besides cash are accounts receivables and inventory. And those are operating assets. What would not be considered an operating asset in the current asset area? If you had a short-term investment, you wouldn't worry about that change. It doesn't impact operations, it impacts investing activities. So we'll take a look. Did accounts receivables increase or decrease? So if you take the difference between the prior year and this year, you will see that it did decrease. So there's an overall decrease in our accounts receivable account. What we report here is how that decrease impacts cash. So if accounts receivables decreasing, that means we collected more in cash. So it's a positive impact. So we show that as positive 5638. Now let's go to inventory. Inventory actually increases. It goes from 143.20 up to 165,667. So we first say, okay, there was an increase in inventory. Now, if inventory is increasing, that means we spent more money on inventory. So it shows it as a decrease to cash flow. So that increase in inventory, cash flow is affected opposite. Any questions? Okay, those are the two current operating assets. Now let's go to current liabilities. There's only two, and they're both operating liabilities, meaning the liabilities are caused by normal operations. Accounts payable, wow, that decreased significantly. Went from a 157,530 balance down to 20,372. So there was an overall decrease in accounts payable. So what's the impact on cash? Well, if accounts payable is decreasing, that means we paid more on accounts payable from the beginning of the year to the end of the year. So it has the same effect on cash flow. Decrease 137,158. Income taxes payable also decreased. It went from a $6,100 balance down to a $2,100 balance. Again, that means we paid more from the beginning of the year to the end of the year on this liability. So the effect on cash flow is also a decrease. So that's step 2 of the process of reconciling or adjusting net income accrual to net income cash. So what this answer key does is it says, okay, here's our net income, positive 202,767. Add back the depreciation, add the decrease in accounts receivable, because that's the impact on cash, and then subtract each of these other changes, because those are the impacts on cash to change net income to cash from operating activities. So although your net income is 202,767, look at the net cash that was actually provided overall for the year by operating activities. Positive 57,600. Any questions? Excellent. Let's go to our next area, which is the investing activities. When I was learning this, I always would put financing first and then investing. So sometimes I still do that automatically. I have to really think, wait a second, what goes next? Cash flows from investing activities. Now remember, our focus is now on long-term assets and short-term investments. We already said there were no short-term investments here. Actually, the only asset that is in this category is the equipment. So we need to see what was the impact on cash from the change in our equipment account. So if you did a T account, like I suggested, put equipment and accumulated depreciation, write down what you know. Equipment starts with a $77,500 balance at the beginning of the year, and it ends with a $107,750 debit balance at the end of this year. So it looks like it increased overall, but we need to know why it increased overall. Take a look at accumulated depreciation. Starts with the balance of $31,000. We also know during the year, we increased accumulated depreciation $15,700 because that's the amount of this year's depreciation expense. We know the ending balance is $46,700. So it looks like that account jives right out. Started with 31,000, increased 15,700. If we add those two together, that gives us a balance of $46,700. Now, why is that important? Well, if we sold any plant assets, equipment during the year, we would have decreased accumulated depreciation. Since we didn't decrease accumulated depreciation for this company for this year, doesn't look like we sold anything. But let's keep looking. In the additional information, so it says there, we need to, one more component, and you will always be given this. We need to know, did they sell any equipment or did they buy any equipment? And it says here in additional information A, this company purchased equipment for $30,250 cash. If they did that, they would have debited their equipment account. So let's see if that is why the account increased. And if you do the math, yeah. So if you add $30,250 to the $77,500 beginning balance, that gives you the ending balance. So we've identified the only transaction that affected equipment during the year and how cash was affected. Now we will show it on our statement of cash flow. So although the equipment account increased, we're not worried about that here. We're saying, oh, but here's how that equipment purchase affected cash. Cash paid for equipment, it decreased $30,250. So the only investing activity was that purchase. So overall, the net cash used in investing activities, $30,250. Now be careful. Just don't take the difference between those two accounts or the two balances, the beginning year and the end of the year, and automatically put that. You have to remember, sometimes a company may buy more equipment without cash. They may buy it with a notes payable. So don't automatically think cash was affected. You need to look at the information given to you. Are there any questions on that? Let's go to financing, our last area. This is where we account for changes in cash due to borrowing or paying off loans or bonds that we've sold or equity accounts. So that's our focus. And if you do some T accounts again for those items on our balance sheet, we could help identify why the accounts changed and the impact on cash. So there are no long-term liabilities for this company or any loans. Great. So the only other changes from investing or financing, see, I'm doing it again, from financing activities are due to equity changes. So let's take a look. Looks like we have a common stock account. It goes from a $25,000 balance to a $40,000 balance. We also have a paid-in capital in excess of par. Remember that account from like chapter 13, I think it was, or 14? Remember, that's where we throw the excess when we receive more on a sale of stock than the par value. That also increased, went from a $20,000 balance up to a $68,000 balance. So let's first focus on that. We need some additional information. In B, they tell us the company issued 3,000 shares of common stock for $21 per share. So if we take 3,000, I've got too many of these little app things on here. Okay. 3,000 times 21, the company sold stock receiving cash of 63,000. So that's the total cash. So what do we do with these accounts? Well, take the difference. The difference between 40 and 25 should be the 53,000 shares they sold times the $5 par value. Yeah. So we only increased the common stock account for the portion of that sale that reflects the par value, 3,000 shares times $5. The excess, or the remaining 48,000, was put or credited into paid-in capital in excess of par. Absolutely. And that accounts for our overall increase. When we write this, though, we don't split it between, well, here's the cash we received for the par value, and here's the cash we received for the paid-in capital in excess of par value. No, we just say the overall cash received from selling stock, $63,000. We're just determining what I just did, why those accounts increased, and make sure we account for any impact on cash for the transactions that increased those accounts. And we did. Are there questions on that? The final account we have to look at is retained earnings. Retained earnings goes from a $32,450 balance to a $175,217 balance. Why did it change? Well, first of all, definitely the net income of the company increases retained earnings from the beginning of the year to the end of the year. So if I take the $32,450 plus the company's net income of $202,767, if there were no dividends paid, that balance should be $235,217. But in Part C, they go, oh no, there were dividends paid this year. Declared and paid $60,000 of dividends. So that $60,000 would decrease retained earnings. Now, when you decrease the retained earnings by $60,000, you get the $175,217. So we've identified what the impact of the changes in retained earnings have on cash. So that dividend decreases cash flow from financing activities. Now, if you're going, well, what about net income? We already did that. We already showed the impact of net income separately in its own little section. So you don't have to worry about that. Worry about why retained earnings decreased. So the two activities that are accounted for in this area would be the cash received minus the cash paid for dividends. So overall, the company received or has net cash provided by financing activities, $3,000. So we've accounted for why cash changed. We had an increase in cash from our operations. We spent some of the cash to buy more assets, and we have an increase in cash due to our financing activities. And the information over here provides the details. Any questions on those? Okay, so then our final steps, first, net these three amounts together. 57,600 minus the 3250 plus the 3,000. So cash changed overall for the year, $30,350. Now reconcile it. The cash balance at the beginning of this year, end of last year, was $28,400. I get that right off the balance sheet. If I add the overall increase, it should be the balance on my balance sheet at the end of this year, and it does. So now you're proving you reported everything on this statement of cash flow. Any questions?
Miss Laurie, I have a question.
Yeah.
So it's about, so why are we really like looking for in the statement of cash? I know like we are looking into like the cash we actually use,
Mhm.
but like what's the importance of this?
Okay. So before the statement of cash flow, all we can do is look at a balance sheet and go, oh, cash increased from 28,400 up to 58,750. And that's all you really knew as a decision maker. Now, with the statement of cash flow, we could see how well is the company producing cash, because net income doesn't equal net cash. And it's the cash that runs the business. You could see here with that huge difference there. So people sometimes can look at this number and go, oh, they're doing pretty good. But if this number wasn't provided, sometimes that number. So they have a false reading on how well the company's doing managing their cash. Same with down here. We don't know if the company's purchasing more equipment with their cash or buying investments with their cash or making money off their investments. But this section tells us that, as well as the financing area. How well, what's the company doing to finance? Oh, look, they were able to sell more stock. People want to buy their stock. That's what it tells a decision maker. And they're keeping the stockholders happy by paying dividends. So every company will, you will look at and analyze differently, but it's giving you the information to help you really see how well the company manages their cash in these different major activities of any business. Does that make sense?
Yeah.
Good.
But
Excellent.
why the difference of when it's positive provide and when it's negative use? Why is the difference between those?
Okay, so provided means, think of the word provided, you're given. Okay, so when it's positive, that means the operations gave 57,600 to cash or provided for it. Like you could think of, you're providing for your children. Okay, that's what we're saying here. The word used means, oh, okay, when you're depleting something, you're using it up.
Way to go, Lori. She already got problems with English, and you say depleted, like she gonna understand that.
Could somebody help me with this?
Yes, please.
Used, you can think of that as
Or you could think about it when it's provided, even with the company, how I look at it is like when if you own that company, what's provided is what your customers, that's the money you receive from your customers. That's what was given from whatever services or goods you have sold or provided. And what you use is what has come out of what,
there you go.
Out of that money. So you're spending that money. So used is what you had to give out, and provided is what's coming into the company.
Thank you. Perfect, Jazz. How does that sound, Penelope?
Yeah, much better.
Thank you. I get caught up in my little terms.
I have a question, Professor.
Sure.
I came in a little late on the class, but I noticed that you have like the breakdowns of like the cost of goods sold. One thing I know for myself when I do the T accounts, I get a little confused sometimes. But like if I look at it, I mean, like for like the ones that say like no other transactions have been made is kind of easier because you don't have to speculate or kind of trace back where the money comes from. But every time I do the T account, I get a little confused, mainly with the when it comes down to like the equipment and appreciated, because you have to look. I get confused. So I don't know. I didn't use any of that stuff like you put at the top, like with all the like trying to trace it back. I just used what was given. But I know if you give it in a test where I have to find something, I get a little. Yeah.
Let me give you a formula. Will that help better instead of a T account?
Yes, definitely.
Okay, so let me leave this and open up a new document and share that with you guys. Where am I? What am I? Let's see. There we go. Okay. Let me open this. Okay, so you should see a blank Word document. So here's how you can think of it. Beginning balance. So if you're looking at assets, okay? So long-term assets. Beginning balance plus the cost of purchases minus the cost of items sold should equal the ending balance. Beginning balance being the beginning of the year, ending balance being, of course, the end of this year. So it's just algebra. So you will need to know 3 of these items. They would need to be given. Okay? So using the information they just give and saying, okay, that's fine. I'll just plug in 30,250. You may be incorrect. And here's why. Because what if, so in this case, let's just put in the 77,500 plus they tell us they purchased 30,250 minus, and you just want to call this A because you don't know A, equals 107,750. Now, if you take 77,500 plus 30,250, it equals 107,750. So your A is 0. You didn't sell anything. But what if this number is not these 2 numbers added together? That's why I use a T account. But using this formula will help you achieve that. Does that make sense?
Yeah, so if indeed that number didn't equal it, then that would mean we had to have purchased something.
Sold something.
Sold something. I'm sorry, sold something.
Right. Now,
Okay. And whatever that variable would be, that would be the cost of the amount of cash we received from the sale.
no,
No?
that's the cost of the item that was sold. Let me show you next thing.
Okay.
Important, we look at how accumulated depreciation changes as well. So you'll do the same thing, beginning balance plus current year depreciation expense, right? Because we always add the current year depreciation expense minus depreciation on items sold should equal our ending balance. So if any item was sold during the year, I'm going to run through an example and show you what I'm talking about. If any item was sold during the year, we would have decreased accumulated depreciation. So you're going, well, what's the big deal? This is probably a little bit more than you would see in a test, but what's important is cash received on the sale of an asset equals selling price minus book value, okay, plus gain, plus gain or minus loss. Are you following me on that?
Yes.
When we calculated gain or loss, we said selling price minus book value will give us our gain or loss. Well, right now, this is what we're looking for. So we need to figure out, well, what was the book value of the asset we sold? That would be the cost of the item that was sold minus all the depreciation taken on it. And if there was any gain that would have been on the income statement. That means we sold it for more than its book value. So the selling price would be higher than the book value. If there was a loss on the income statement, that means we would have sold it for less than its book value. So we would decrease that to determine the selling price. So let me show you a quick example here. So let's say your equipment begins with a balance of 100,000. Whoops. There's no new purchases during the year and ends with a balance of 75,000. So you're going to need to know, one, if you bought more or if you sold any. So you'll always be given that third variable. Let's say our accumulated depreciation, so let me think this through, starts with the balance of 50,000. Current depreciation is 10,000. Okay. And ends with a balance of 50, I just want to make sure my numbers all jive. 40,000. The gain on sale on the income statement is $4,000. So these items will all be known. You would need to know each one of these to do this type of calculation. So now you just fit it into your formula. For the equipment, the beginning balance is 100,000. There were no new purchases. Okay. Subtract A, which would be the cost of the item sold, and that will give you your ending balance. Well, if that's the case, the cost of the item sold was $25,000. That was the original cost. Now let's take a look at accumulated depreciation. Starts with a balance of 50,000. Increases for this year's depreciation 10,000. It needs to be decreased for any accumulated depreciation related to that piece of equipment that was sold, and that will give us our current balance. So the depreciation on items sold had to have been $20,000. So the book value of the asset that was sold on the day of the sale equals 25,000 cost minus the depreciation that was taken on it, or $5,000. Since there was a gain on this sale, that means we add it. So the selling price for cash, $9,000. That's how we backed into it. Does it make sense?
Yes.
You sound. Did I just blow your
I'm
mind?
saying that, look, I was just thinking, because I'm listening, you know how you're asking questions and you can't hear us. I said
Yeah.
it would be really funny if you could hear like what we're really saying, since you can't hear us. I'm like, yeah, I think I can understand it, but I really don't understand it. But I kind of get it.
All right. It brings us back to the equation. Selling price minus book value. And that difference, maybe if you saw it this way, gives us, if it's positive, it's a gain. If it's negative, it's a loss. So we need to figure out selling price. We know book value is 20,000. We know the gain, I'm sorry, 5,000. That's wrong. 5,000. We know the gain from our income statement on this sale was 4,000. So that means we must have received $9,000. And that's how we figure out book value on the asset that was sold. How much did my equipment account go down? That was the cost of the item that was sold. How much did my accumulated depreciation account go down? That's how much depreciation was on that item that was sold. That's probably the hardest part of figuring out, find that book value.
I know, I think that I wish it was more problems like this in the homework and the stuff. They have the easy ones that just say nothing else happened, nothing else happened. So it's so easy. There isn't many like that has, you have to do the trait like this one basically.
Mm-hmm.
So this was a good one.
Okay, good. Yeah, I think I created the test back in the break, the winter break. So it's along the same lines as what we're doing for the homework. So will we get this crazy on the test? Nah. Okay, but that's what you have to keep in mind when you are doing one of these. It's a lot more than them giving you information. Sometimes we really have to make sure, geez, what they told me, does that jive out? You know, does the beginning balance plus those cost of purchases equal my ending balance? If it does, you're cool. Keep going. Okay. Anything else? Take a quick look at long-term, like the financing. Were you okay on the financing analysis?
I hope everybody is, of course, but that was, this
You're okay
was
on.
the hardest part for me.
Okay. Anybody else? Any questions on any of this determining amounts or? I was really surprised. Like my online students were like, wow, this was the easiest chapter so far. I'm like, wow, statement of cash flow is so hard to me. But
Chapter 16 was easy, but 15, no.
yeah. See, and it's just because of all those different categories. That chapter 15, I tried to break it down. They just made it so complex, but we got to teach what they tell us, you know. That's just the way we account for investments. It used to be a lot easier when I was in college, but then they came out with that new standard in the 90s, and it was like, whoa, why do you have all? It used to be worse, actually. There used to be a couple. There used to be a trading and available for sale category for stocks too. They actually combined the two and just made it one category, thank God. But it does. It gets a little crazy.
So is the test 15 heavy or 16 heavy?
Point wise,
Like information wise, because I agree with Tanisha, like 15 was a little harder than 16. So I'm just wondering, are you gonna have more, like, is it more of 15 on the test, or is just like equally spread out?
I can't remember. Let me take a look. I think I have it in there. Yeah, I do.
Share your screen while you're looking at it.
Yeah, get the hell out of here. Oh, 2 people submitted it. Let's see. You overachievers. Let's see if I can get in and take a look at the. All right, let me see the questions. So I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, maybe 11. Multiple choice from chapter 15, and 1, 2, 3, 4, 5, 6, 7, 8, 9 multiple choice from chapter 16. So that's about evenly balanced. I have 3 problems, short problems, 15, 30, that make up 45 points from chapter 15. And then cash flow, 30 points from chapter 16. Okay?
I'm dead. I'm dead.
We're dead together, Tanisha.
The problems for chapter 15 are more like the exercises, so you know that. So they're very short problems. You know, it's not going to be a vast problem like you do for your homework. It's going to be just focusing on a particular item.
What did you say the problem was for the chapter 15?
Chapter 15, I just said point value. I didn't tell you what problems they were.
Oh, that's what I meant, the point value.
Okay, they're 50 points, it looks like. Okay, so I'll tell you some focus areas. So with your debt investments, you want to focus on trading and available for sale. Okay. You don't want to so much focus on held to maturity. So the journal entries related to that. And then the stock investments, you want to know how to do the journal entries if it's not significant influence, and that equity method, significant influence. So really review those. Any other questions?
No, I'm gonna take it now. I'm nervous. I'm just gonna go at it.
Let me see if I can get out of here without jazzing it all up. No pun intended. Okay. And overachievers, good job on taking your test early. I hope you did well. Any other questions?
I have one question. Those overachievers that took it, my number is 57. It's like, no, get out. Have a good day.
Well, you know what? I'm going to tell you something. I make it algorithmic, so nobody gets the same test. Ah.
I'm just joshing with you, Lord.
I'm already on to you. I know you're kidding around. So, good.
Miss Lori, did you get my email?
Yes, I did, and I emailed you back. So let's set up a meeting, maybe tomorrow around 11:30 if you
Yeah, 11:30 is fine.
Okay, I'll send you a link and we'll meet and we'll chat about that, okay?
All right, thank you.
You're very welcome. Else? All right, guys, I am going to let you go. If you have any questions before your test is due Friday night, let me know. Make sure you get all your chapter 16 requirements completed by tomorrow night. And I will see you on Monday to start chapter 17's lecture. Have a good one. Be safe.
Thank you.
You're welcome.
Have a good day, Professor Dunn.
You too, Kels.
Thanks. Stay safe.
You too, honey.